Greenwich. Well, we're going to continue our conversation about IPOs and the market there. We go to Paul Barr, Director of Research at Renaissance Capital, a global research and money management firm specializing in IPOs. Paul joins us now from company's headquarters in Greenwich, Connecticut. Paul, welcome back to Bloomberg News. Always good to have you.
Thanks for having me. How are you?
Very well, thanks. You just heard our report by our Sue Keenan. What can you add to that? Talk to us about the IPO market as we end the month of May here.
Sure. Well, you know, the IPO market, it's really still trying to gain its footing from the recovery that started early in 2009. Remember, the market for IPOs was virtually shut down for about 6 months prior to Mead Johnson's IPO in early 2009, and it's since gained momentum through the second half of last year and was coming out in 2010 in a pretty positive footing until some of the recent developments with European debt crisis and so forth really causing some volatility for IPOs.
Well, Paul, as our Sue Keenan just told us, she said that from 2005 to 2007, private equity firms spent a record $1.6 trillion in deals. Are we looking to see that pick up right now?
That's right. You know, the private equity space really counts on a vibrant IPO market. These companies, you know, the business model is such where they buy companies and they reposition them and make them better and then bring them back to market, hopefully, you know, on a more positive track. You know, what they did, though, in those boom times is really loaded up these companies with a lot of debt. So what you're seeing now is an important process whereby they're recapitalizing these companies. They're going public for two main reasons. One, to pay down kind of that large debt burden that you talked about, and secondarily to return, you know, funds to their investors, which in some cases have been sitting on these investments for quite some time.
Paul, you keeping a close watch on the S&P 500?
Sure.
Yeah, give us a sense of looking at that and how that might give some private equity owners pause to say maybe it's the time for us to jump back in here.
Right. Well, you know, it's really, for IPOs, it's really about having stability in the market.
Right.
While certainly a positive market is going to help everyone and lift all boats, the volatility is what really creates an issue for IPOs. In general, though, I think what the private equity owners are looking for is, first off, one, stability, but secondarily, they need to bring these companies to market at attractive prices. As long as they're priced attractively, there will be demand from investors. And again, you know, assuming that they're bringing high-quality companies to market and that they can tell a compelling story.
All right, Paul Barr, Director of Research at Renaissance Capital, joining us from Greenwich. Paul, thank you so much.